Cool. Hey guys, it's Darian Ville, Exit Realty. I am here live at one of our 4 offices throughout the Chicagoland area. Today I'm here at 7300 South Cottage Grove, and I'm here with Javon Robertson, aka the Mortgage Champ, branch manager with Champion Mortgage Group. How are we doing
Yes,
today?
I'm doing good, man. Doing good. Thanks for having me.
All right, absolutely. So today we are going to talk mortgages. We're going to talk mortgages. There's a lot of misinformed people, a lot of uninformed people, just how mortgages work. A lot of people think, just in conversations that I've had, things that I see, online. There's this belief that you need astronomical amounts of money to put down in order to buy a house. That your credit score, you have to have A1 credit. I mean, that helps, of course, but. So we're just gonna kind of have a little Q&A session, just kind of shoot the breeze a little bit, inform the people, go that route. All right. So first question we'll get to is credit score. People think you need to have 800, be close to 700. And for the purpose of this conversation, they are. Primarily, there's 4 different type of loans. There's FHA, conventional, VA loans if you are, a veteran, not a veteran, if you military service, and there's USDA loans, which are more around rural areas and farmland. For the purpose of this conversation, we're talking just FHA and conventional. If you need more information about either of those other 2 loans, definitely reach out to myself or reach out to Javon. My contact information and Javon's contact information will be at the bottom of this video. So, for the purposes of FHA and conventional, minimal credit score. What does a buyer need to be?
So with an FHA loan, you can actually get into a home with as low as a 550 credit score. Now, a 550 credit score, because the score is so low, there's a lot more risk involved, which the bankers gonna want to see that you have got more money invested into that deal. As long as you could meet the requirements, that your standard requirements, one-time rent payments, documentable. You got the 10% that you need to put down, and closing costs. If the seller's not willing to cover your closing costs, you can get into a home with that 550 credit score. 3.5% down, you're at a 580. Okay, so on $100,000 or $200,000 loan, which average purchase price these days, $200 to
roughly
$250. You're looking at a down payment of $7,000, and that's where a lot of the grant programs start to kick in. The first-time home buyer down payment assistance / grant programs start to kick in that 580 credit score.
Gotcha. And so let me ask you this: so does the credit score, does a buyer's potential credit score, does that potentially impact their interest rate? Meaning, if their credit score is higher, does that then translate to a lower interest rate?
It can, but in the environment that we're in, I mean, an eighth of a point difference in rate on a $250,000 mortgage loan, FHA, 800 credit score versus 580 credit score is really not that impactful.
Okay.
Once we get more into an environment rate-wise where rates are much lower, then that's when it's going to really matter. And at that credit score 580, it's not really even about credit. And here's what I'll say about interest rates. And I know we said we weren't going to really talk too much about it. It's more about payment, more about affordability. We could talk interest rates all day long. I know folks with interest rates. I remember a window back when we was killing it in 2020, 2021. It was a window there where people were getting rates at 1.5%. Those same folks I know today, and they can't afford their mortgage. So what good is the rate if you can't afford the mortgage? So it's really about payment and just making sure that financially, just your total monthly outgo is comfortable for you, so that you could continue to pay your bills, continue to improve your credit, and maintain, and hold on to your home. So it's about payment versus interest rate.
Gotcha. And we did just kind of touch on it, but I do want to talk about interest rates a little bit because obviously extremely popular conversation nowadays. The Fed's gonna lower interest rates. Interest rate. I hear a lot of potential buyers, a lot of people on the fence. Well, interest rates are too high. I want to wait till interest rates come down. That's a different conversation for a different day. Whether or not you should or whether or not you shouldn't wait. Right, we know payment. Can you afford the payment? That matters. But interest rate interest rates matter, right? So if I buy at 6.75 today, if I close today at 6.75 and in December interest rates are down to 6%, that makes a pretty big difference in that payment.
It makes a difference in the payment. If you can, maybe you can lower that payment. Just giving that example, maybe you can lower your monthly payment depending on the mortgage amount. $50 to $100. On that average purchase price. I'd have to do some math.
Right, of course.
But the savings, there is some potential. There's some savings there for sure. Yeah.
Right. And what I always say around interest rates, I tell this to every single potential buyer, any potential client who wants to wait on interest rates to come down. First thing is you can't time the market. None of us know when interest rates are going to go down. It's all forecasting, but you can't time the market. Second thing is, if it's affordable for you to buy right now, you can buy right now. Those interest rates go down, like the example I just gave, 6.75 to 6%. You can always refinance. So you buy now at 6.75, interest rates drop to 6%. You go see Javon and say, hey, Javon, I'm thinking about refinancing. How big of a difference is this going to make in my monthly payment?
Yeah, we'll just do the math. And I think a lot of, we have a history as a people, as a community of Black folks, of being skeptical when we get to talking about real estate and finances and anything having to do with money. But you can go back. I'm a huge history buff. I love stats. I can tell you, our history in this country going all the way back to, when we first hit the shores. And from an economic standpoint, the impact that we had in this country and the impact economy has had on us. And so with that all being said, when somebody is telling you about buying a home at the right time, or like you just mentioned, affordability, we're not doing this to get over on you. We're just trying to inform you. We're going to inform, just because you may not think it's the right time to buy, somebody is buying. And like I say this to folks all the time. Even in a down market, somebody making some money.
Yep.
Right. And so we just have to have a better understanding of wealth building and how all of this stuff works. Even if it's a general understanding, as rates begin to creep up or go down, prices are going to start to go up. We're still dealing with a home shortage crisis right now. And so, as rates come down, more folks are going to start to jump into the pool of buyers and then come off the fence. And all that does is drive prices up because sellers say, oh, okay, we got more people out here to bid on these homes. Let's jack the prices up.
Yep.
And that's, now you've missed the boat once again. I had folks that were, I'm going to wait till the rates go down to 2.5% from 3%. Come on, man. Now you gamble.
Yep.
You know what I mean?
Yep.
You either gambling or you're not serious.
Yep. Yep.
So that's just kind of my take on it.
Yeah, and that's actually another point with that whole trying to time the market and wait for interest rates. When those interest rates finally drop, that's when everybody else then tries to hop into the market. So now,
it's a bottleneck.
Right, and in this market right now, we've got low inventory. So there's already not a lot of houses out there for sale. Interest rates come down, you get a lot more people who hop into the market. Now guess what? Now you scratching, you clawing, you fighting, trying to get that house. Now you got to increase your offers. You got to get creative with your offers and things like that because you got a lot more competition. So if it's affordable for you, buy now. Don't worry about the interest rate as long as it's affordable. The saying is, You marry the house, you date the interest rate.
That's
You can,
it.
you can always refinance
Yep.
if that interest rate comes down.
Yep, absolutely.
So we talked credit score, we talked interest rate. Let's talk DTI, debt to income ratio, because I know that's a pretty important factor when trying to get pre-approved to buy a house. Can you tell people a little bit about DTI, what that means?
Man, it's, as we're sitting here talking, it's so many layers and layers and layers and of how this thing all works, and we can talk about this for the next 30 days and still not cover everything. Debt to income ratio it's a hot button, and it always is. No matter how much information you put out there, it always is, right? Debt to income ratio, or DTI, is really simple. What we do is we take your gross income, and gross meaning you take a look at box number 5 on your W-2 statement, the statement that they hand out to you at the end of the year.
Mm-hmm.
That's your gross income, and we divide that by 12 times 45%, or 50%. So just in to keep it simple, if you make $60,000 a year, that's $5,000 a month. Half of that is, or 50% of that is $2,500. All of your bills on a monthly basis plus the proposed mortgage payment have to fit inside of that $2,500. So average mortgage payment these days, what? $1,700 to
$2,000.
$2,000, something like that.
Mm-hmm.
So 2,000 plus 500, which means you can't have a $900 car payment looking for a $2,000 mortgage. It's just not gonna work, right? And so that's the simplest way to look at it. It's a few more things that go into it, but I can sit here and explain it and nobody will get it. But the layman's term version of it, 50% of your gross monthly income, everything has to fit into it. And we're looking at monthly payments when we're going to calculate your DTI. We're not looking at the overall balance. So if you got a car loan for 20 grand, and I say, okay, well, what's the, I got $20,000. Well, you're not paying that monthly. You got a payment associated with that balance.
Gotcha.
And so that balance plus the proposed mortgage payment plus whatever minimum credit cards or whatever's on your credit report, we're fitting that all into that 50%. So, and I use 50% because a lot of my clients go FHA, and we can go, to that 50% sometimes, depending on other factors, as high as 56%. But I'm factoring some other things when I go that high. So.
And that was going to be my next question. So it's 50%. Is that kind of the threshold, or that 56% is?
So I'm a pretty responsible lender. I mean, when I go to, if I'm going to 56%, it's a few things that I'm considering. I'm taking into consideration, right? It is the buyer, let's say, for example, married, right? Let's say the husband is buying a home, wife has income, but for whatever reason, we can't put her on the mortgage, right? She'll automatically go on to the title of the home, but for whatever reason, she can't go on the mortgage, right? In the back of my mind, I know she's got income, right? He's teeter-tottering,
Mm-hmm.
right? And they need a little bit more house, right? So I'll say, all right, let's take you to 55%, right? Because I know your wife is going to be contributing to the household income. So in a situation like that, I'll do it. Now, if you got, let's say, for example, you got a woman who, got some boyfriend, and there's really no skin in the game in terms of him being married to her or anything like that. There's not even a plan for that. And they just live together. I'm not doing that, because he can up and just leave, right? And so now that income that she was once counting on is gone. And now you house poor. You know what I mean? Trying to make the decision between making your mortgage payment and buying groceries for yourself and kids. So I have to be responsible when it comes to that. I mean, like I said, we got some room, but I'm real responsible when it comes to that.
Absolutely. So let's talk about let's talk down payment.
Okay.
So FHA versus conventional. So if I'm doing, let's say, doing an FHA loan, get a buyer who is at that, let's say 50%, that's the number, 50% DTI, credit score is, let's say 580. What are we looking at in terms of, well, how do you calculate? Is there a methodology in calculating down payment?
So my rule of thumb with FHA, and we gotta, and I'm talking to my real estate agents. You being one, well, I haven't had this issue with you. You always spot on with stuff, so I gotta shout you out on that.
Appreciate that.
And when you don't know anything, when you don't know the answer to something, you don't have a problem calling me and
Yeah,
saying,
absolutely.
you know, your ego ain't that big to where, oh, I know this. You'll call me and say, hey, look, man, I'm just what I'm looking to do. Walk me through it. You know what I mean? So, I say that to say we've got to be better. Our real estate agents have to be better with understanding how to calculate. My rule of thumb is on the FHA purchase, 10% of the purchase price. When you talk about down payment and closing costs, 10% of the purchase price. So if we're looking to purchase a $250,000 home, 10% of $250,000 is $25,000. Now one might say, well, where is he gonna get $25,000 from? Well, that's where we all put our hands together and we figure it out. So if the buyer qualifies for down payment assistance, that's 3.5% right there. Now we got 6.5% left to go. Okay. If FHA will allow 6% in a closing cost credit, and you a badass realtor, you're gonna get that for your client. So now we only got 5% left. So typically that 5%,
a half percent.
a half percent.
0.5%.
So you only got 0.5% left to go. Well, a lot of times that 0.5% is gonna get ate up with a tax proration credit. So now you just gotta show me that you got that remaining money left. So that's how a lot of times I'm able to have folks come to the table with zero down. You asked me about that one time. And that's basically all I do, you know. So there's no real magic to it. But here's on the flip side of that. I just had an agent send me a contract, and we had this conversation. You know how I am. I'll jump on a Zoom call with everybody on the phone in a heartbeat, right? Because I'm real big on everybody being on the same page. Had the conversation. You know, I'm telling you in the email, here's how much money I've verified for the guy. He had $3,000, $235,000 purchase. 10% of $235,000 is $23,500. I got him $11,000 in down payment assistance. She got him 2% in the closing cost credit. He's only got $5,000. There's a shortage there. Where's the rest of the money gonna come from? So now we gotta sit and wait for, you know, the attorney to do some amazing job to see if we can get additional credits during the attorney review period. And that's not always a guarantee, right? So we gotta do a better job with negotiating. And if you don't understand, pick up the phone and say, hey, listen, I'm about to make an offer on this house for this guy. Give me some direction, and I'm gonna point you right back to what we verified. Well, he's short based off of what you're telling me. So you're gonna have to ask for a little bit more, right? So we just gotta do a better job with that when it comes to that, and everybody's gotta do it. You know, like I said, we spend a lot of time. We were just talking about this before we got started, looking at videos and all. We gotta read. We gotta pay attention to what's going on in the fine print, so that we're not stuck, you know, like a deer in headlights, you know, lost, not really knowing what the next move is, you know what I mean? So, yeah.
I mean, and listen, it's not to pat myself on the back, but how many clients have I come to? How many clients have I picked up the phone and said, you know, like, what are we looking at? So we looking at this house,
Man,
and like how much?
every last one of them. We talked through them.
Every last one of them.
Yeah, because we know what that looks like. You know what I mean? You could have a situation where, you know, if your client is going, okay, well, you didn't tell me this, sir. No, we informed you.
Yeah, we told you.
And here's the emails, and we, you know, and here's the recorded calls. We talked about this, you know what I mean? And so, I remember the last deal we did not too long ago, where she was on the ball with everything. She took care of everything. Now,
everything.
It was kind of a mess because the seller didn't have his thing together, but
right.
You know, she, you know, shout out to her for doing what she needed to do, and you got an amazing deal So it was love. Oh, and I forgot to give you this, man. I forgot to give you this. This is I like to give this to my agents, and you don't need a glass.
Oh, you got a
They go
straw.
straw, man, because
Yes, sir, brother.
you went through it, man.
That was tough. That last deal, that was tough. But you know what, man? It made it worth it. See her mom and her dad
It was
there.
man, it was everything.
At that closing.
It was everything.
She got that house right down the street from
Yep.
where her dad lives, the block that she grew up on,
Yep.
and you got her money back at the closing.
Yep.
I don't even. We're not for this conversation.
Yeah, that's another.
Yeah, we're not even
conversation.
about to get into that.
That's my magic.
Yeah, she got money back closing, and she got what is she $10,000 worth of equity in that house?
No, it's when we did the math, it was like 15,000.
$15,000 worth of
Yeah.
equity. Yeah. So that worked out.
It was a
That
hell of
worked
a
out.
deal.
Yeah, that
Yeah.
worked out fantastic. But yeah, so right, so down payment. So we talked about down payment. You mentioned closing costs. So between down payment and closing costs, you thinking roughly you need 10%.
I say 10%, and then you just work your way backwards with down payment assistance programs, gifts,
Mm-hmm.
your realtor being super aggressive with closing cost credits, and that's how you can reduce that 10% down to the 0.5% like we talked about.
Yeah,
Right? And a lot of times that 0.5% turns into a positive where, like in her case, she got a check back. The numbers are the percentages are never going to change. The numbers might change, but the percentages are they're always going to be the same. So if you remember those percentages, you'll have a successful career in being a real estate agent or a mortgage professional. It's simple.
Right. I mean, as you mentioned, $250,000 price point, 10%, so you need 25,000. A lot of people they hear 25,000, they automatically assume like, oh man, I can't do that. I don't have 25,000.
Right.
But right, you go FHA, you got that 3.5%. You know, if you qualify for some down payment assistance, which that last client that we had, she qualified for down payment assistance. You get the down payment assistance. You get the closing costs thrown in, and so now you only need that 0.5%, that 1%, 2%. And we know, you and I know, like it can be a one-time gift from an immediate family member.
You know, 401k.
It could be 401k, self-directed IRA.
Yep.
Money
in a checking account,
savings account, 403b.
Yep.
So yeah, so that I mean, can't necessarily be that brown paper bag under your mattress money.
Well, sometimes it can,
sometimes
but that's when we got to have a conversation.
Yeah, we gotta have a
that's
conversation.
when you got to pick up the phone and say, hey, how do I do this, right?
Yep.
So that's another conversation, but it can definitely be done for sure.
And so I know you wanted to kind of discuss the difference between a broker, bank, lender, credit union, portfolio lender. Can you dig into that a little bit?
Yeah, so there's a huge difference. So one of the when I got in the business, I've been in the business 29 years. I've been doing this a long time. When I first started out in the business, I started out as a broker. Now this was back in the days where we had all kind of crazy stuff going on. You can get a loan with no documentation, and it was just madness, right? But what I noticed back then is I didn't have much control over the underwriting process, right? You put your file together and sign off on it, make sure you wrote clear or typed clear and legible, and you fax your package or scan and emailed your package over to the end lender, and they would figure it out, right? Even if you knew a lot about what you had going on. And then back in those days, I was just throwing stuff against the wall because I was new, right? And so as I learned my craft and got better at my craft, I still found that I didn't have much control over the underwriting process. So that's a broker, right? And brokers can be good, but they are good for, you find a lot of rate shoppers that use brokers. You find places like these places that you typically never heard of. Those are typically broker shops, and they just shop out and try to get the best rate. But not every buyer or potential borrower fits the broker model, right? You've got banks. What a lot of folks don't realize about banks like Chase, and
Chase, Bank of America.
Bank of America, Wells Fargo, you know, they've got some limits. So most clients, most of us, you know, bank at Chase or PNC or whatever, and we feel like, hey, I've been putting my money into this bank all these years, they should be able to help me. Well, the reason why banks are able to keep their doors open is because they have risk tolerance, right? They're not just gonna deal with everybody. You know, unless you have some type of private client relationship with a bank like a Chase or a Wells Fargo, it's not always guaranteed that you're gonna get a mortgage loan from them. So with that being said, a lot of times, and I've got friends that work for banks and do what I do, that refer clients that they can't help to me because I've got more flexibility. I don't have all these restrictions that a bank might have, right? I don't have the overlays that a broker might have. I've got more control because I can go and knock on my underwriter's door and say, hey, look, man, I don't agree with what you're asking of this client. Let's walk through this and let's try to push, i.e., that's where the mortgage champion Monica came from. Because sometimes that's what you're doing. You're boxing these underwriters to get these folks to the closing table. And these are, a lot of my clients are deserving people. They might have a couple of issues going on here or whatever, but nothing so much so that, you know, you can say, you know, this person doesn't deserve a mortgage, right? So, but you're not able to it's hard to have that type of flexibility at a bank or at a broker shop. You know, these people, you know, banks have an agenda. Brokers do things the way they see fit to do it, right? You've got portfolio, and so in my opinion, a correspondent lender is the very best way to go in terms of a client that's serious about buying a home, right? A lot of times we don't, you know, as a community, we don't really feel like we can go buy a home. Because like you said, I got to spend all this money, or my credit ain't that great, you know. So there's always this nervousness about it. So you're more than likely to get a mortgage by going with a correspondent lender. So, and we'll get into some of the agenda of banks, which is kind of why I got out. I've worked in the bank world and I got away from it because I just didn't like how things were being handled. And ultimately, it's not about making money. Money comes as you're putting people in homes. It's about getting people in homes. That's the ultimate goal, right?
Absolutely.
So now you got portfolio lenders. Portfolio lenders, like neighborhood home loans or NACA or something like that. Those are lenders that specialize in layering different down payment assistance programs. They do a pretty good job where their involvement with the community. They have, you know, special initiatives to help homeowners, you know, help folks get into home ownership through special programs and stuff. So that would be like a portfolio lender. And then you got credit unions. Credit unions operate much like banks. So that's it. You know, sometimes they may have a special program here and there, but for the most part, they operate a lot like a bank.
Gotcha. Okay. So before we wrap up, say I get let's say I pick up a new potential client, you know, from this video. They say, hey, Darian, saw your video, want to come buy a house. I want to go buy a house. Can you connect me with Javon? What documents do they need? Just initially to get that initial pre-approval.
So documents, and I'll break down what and why. Okay, so we're looking for the last 30 days of pay stubs. So if you get paid every 2 weeks, the last 2 pay stubs, obviously. If you get paid on a weekly basis, the last 4. And so we want those last 30 days because on the pay stub, we're looking at the hourly rate, we're looking at your year to date, which is super important. We're comparing that to what your previous 2 years of income. So which leads us to the next set of documents, which would be your W-2s. Now, a lot of times, I gotta say this, a lot of times you'll put your list together. I usually put the agent on the email so that the agent can follow up. Hey, did you get Javon what he needed so we can get you out? I saw this house that fits. Did you take care of that or whatever? So I keep the agent involved in the entire process, right? So I'm looking for the W-2. A lot of times clients send over their tax returns. Oftentimes I'm not interested in seeing the tax returns because a lot of folks still haven't figured out that you can't have Pookie doing your taxes, right? But since we know Pookie gonna be doing taxes and jacking your taxes up and jeopardizing your relationship with the free world and prison.
Yep.
You know, I just want to see your W-2s, right? And so that W-2 statement is what your employer issues you at the end of the year so that you can go and have a conversation with Pookie about filing your taxes, right? So I don't want to see that. I just want your W-2s. W-2 is going to give you your gross annualized income on a form. I want those last 2 years.
And not to cut you off, but 1099. If you're self-employed, 1099.
You're self-employed. Now, if you're getting a 1099 statement, then in that case, I do need to see the tax returns, and we're just hoping and praying that the tax returns were filed correctly. A lot of times, you're not running into too many issues with folks that are 1099s because 1099 folks are typically contractors or business owners, so they understand that you just can't have any and everybody doing your taxes, so they know, you know, I got to do things a certain way, and not in everybody, because everybody don't move the same way, but for the majority of the clients I deal with, they understand, you know, self-employed's got to be situated the proper way.
Right.
And then after that, we're looking for bank statements. Now, I gotta say this. I get bank folks that send over bank statements to me and with an ending balance of a couple of dollars. So going back to that 10% we talked about needing a, you know, if you're looking to qualify for $250,000 house and you got an ending balance of $200, where's the money coming from? Right? You still got to show me that you got some money, right? So we're not looking for a copy of your bank statements just to prove that you got a bank account. You know, this is, we buying a home, this is an adult business. Most adults should have a bank account, right? So I'm not interested. I'm pretty sure you have one.
Right.
Show me the money.
Right.
Right. And so, so during my pre-approval process, I'm analyzing all of this documentation, trying to make a determination as to whether or not we can qualify you for a mortgage. I'm also taking a look at your saving and your spending habits, so that once you are ready to get out there and start shopping for a home, I can tell you, hey, listen, you know, I know you like to be the person that collects the money on Fridays to buy lunch for the office, but you can't do that because I see all of these Zales into your account from Robert and Shamika and all of these people, and you go pick up the lunch. Stop doing that. We would much rather see a quiet account, what I like to say, a quiet account where the only thing that's going into that account is payroll deposits, right? And if you have an account that's just been, you know, had your 10% sitting in it, a savings account for the last 2-3 months, I'd rather see that, right? Where it's just been sitting there, no traffic at all, because it's less scrutiny. You know, when we get these files, because we're up against deadlines, that's the last thing you want to be fighting with an underwriter about is, you know, why he keeps getting these Zelle payments. So who is this person he's paying money out to? You want the most quiet account that you can find when you're going through this process.
You know, one of my favorite stories to tell is when I'm talking to, you know, clients. You know, we get under contract, and I know you tell them, hey, you know, keep your bank account, you know, no large deposits, no large withdrawals, you know, credit card payments. One of the stories I love to tell is about the client we had who was under contract, like to go to the boat and gamble. It's completely legal. That's not a problem. Nothing wrong with that.
Right.
But won about $8,000 playing craps, and took that cash and deposited it in the bank.
Just put it in the bank.
So now you got a cash deposit of $8,000, and when you're an underwriting, that's a red flag. I mean, not saying you can't do it, but it's got to be a paper trail.
It's got to be a paper trail, and so I think we had a guy go back to the casino and get proof that he won the money, which was a headache. And you know, now everybody's all in this business. He was a little frustrated with that, and this, you know, but that's what happens. We got to be able to trace where this money came from. Are you selling dope? What you doing?
Right, what you doing?
What
Right,
you money
right,
laundering?
right.
Because this happens. It
Yeah,
happens
it
in
happens.
the banking industry, and when that something like that happens, you can't sell that mortgage into the secondary market, which you're not going to get a mortgage loan. So or you may have to wait. So I always say, if you're going to do something like that, you got something going on. Have your play account and have your business account. And when I say business account, the account that you take care of doing business with, right? Play account over here, just keep them separate. It's we know we got things we got to do. Just keep it all separate.
Right, and then just to clarify, so the business account and play account, that play account, you don't necessarily need to see bank statements from that play account if they don't plan on using that
Nope.
as a source of income,
Nope,
right?
not at all.
Okay.
Nope.
Yep.
They got assets sitting in the account that we're going to use to verify the mortgage. You got, let's just call it a savings account. That's what I say, that your business account that you're taking care of your business with. We can use that.
Gotcha. Okay. Cool, man. I think that's about it. You want to tell everybody how they can reach you?
And you can reach me at, I got a website, I got social media, I got email. So, social media, Facebook, Instagram, got TikTok.
You got TikTok?
LinkedIn, my email, Javon@championmortgagegroup.net. Telephone 312-972-2824. Website www.championmortgagegroup.net. But I do a lot of stuff on Facebook, LinkedIn. You can always hit me up there, and I'll always get right back to you.
Yep. And same for me. I'm on Facebook. I'm on Instagram. Facebook is Darian Veal. Instagram, DV Home Finder. YouTube, I believe it's DV Home Finder. Actually, I got a TikTok too.
You got TikTok?
Yeah. They forced me to the TikTok world, man.
Right.
I got a TikTok.
Right.
DV Home Finder. And all my contact information and Javon's contact information will be, in the comments of this video. So.
Thanks for having me, man. I appreciate it.
Appreciate you, brother. Yes, sir, man. Take care.
Yeah.
All right, guys, got any questions, reach out to myself, reach out to Javon, reach out to the both of us. Now, let's get this money, get you guys in some houses. Take care.
Peace, y'all.